welcome to the crypto jungle. My name is Baloo the Bear, and here on the channel we focus on the technicals, we focus on the fundamentals, and we focus on not shilling and spreading a bunch of bullshit and hype out in this overly hyped, overly enthusiastic cryptocurrency market. So if you're new here, I want to invite you to subscribe. And yeah, we're going to take a look at Bitcoin, traditional finance. We're getting a little bit of a move here, mostly in Bitcoin. The alts are moving alongside that bullish price action. But heck, why don't I just show a chart? Let's just jump right into it. So we're looking at Bitcoin here on the daily. People are really chomping at the bit. They really think that, you know, we're ready to rally, that we've met a floor. And I want to kind of put things into perspective. Everybody loves perspective in a bear market, don't they? We have experienced a very large downturn. Supply is in control. The forces of demand right now are very, very weak, and they're mainly coming from speculators. More specifically, speculators that came in during this bull market. Okay, now that's a very important distinction to make. You know, everybody who's excited right now entered during this bull market. Why that's important is you don't have new participants coming into the market. If you talk to any of your friends, family, neighbors, it doesn't matter who you talk to, and you ask them what they think about cryptocurrency, they will give you a very negative review of it. The herd, you know, the masses as a whole, they don't care. They're not worried about buying cryptocurrency right now. They're worried about filling their gas tank. So, you know, this bullish price action in this local zone is driven by traders and speculators from the previous cycle. So that is not a very high source of demand. And it's important to recognize that and honor that. Now, what it takes in order to break a trend, what it takes in order to, you know, get a bull market, is we need several months, preferably several years of accumulation, of sideways trading activity. So obviously, if you're trading smaller time frames, you can, you know, squeeze a few basis points out here and there, no problem. But if you're the individual who's looking at like, hey, what do I buy and when do I buy it? I don't see anything on the horizon right now. We're still in a macro lower high, lower low scenario. And we're just trying to prove a floor here at around 20K. So, you know, we have had a rally here. If we actually zoom in on the daily, it looks like there's even the possibility that this candle closes below the level of our AR here. This stands for automatic rally. We have our seller's climax at the low, automatic rally at the high for phase A. And there's a high likelihood, high probability that we do end up closing in the next 16 hours below the automatic rally. So that will be kind of a firm rejection, and we will meander our way back down to kind of the 17K level. Maybe we hold at 19K, but yeah, a lot of people really excited about this move. They think, you know, I see countless individuals going long, and I just think that it's the wrong, you're in the wrong spot to be going long. If you wanted to go long in this market, you could have done so down here, but if you're looking at this area as a breakout and wanting to go long, well, I hope that I'm wrong. Best of luck to you, but I really think that that's a shitty entry. It's a really shitty entry, and it's not coming on a lot of confidence. We don't have a lot of structure down here, and I just don't think it's going to work out for you. But hey, you know, I've been wrong before. I'll probably be wrong again, and it's the traders that admit that they can be wrong that you should be listening to in the first place. If we hold this general area, you know, if we hold here, I'd be looking up here. Pay really close attention to how price behaves at the top of this channel. If it looks like it's weak, if it looks like it's up thrusting, and there's a high likelihood of a rejection going down to kind of the smaller time frames, that would be the area for a short for anybody who is trading the trading range that has developed here. We have officially, well, not officially, but we have a trading range here, and this is kind of phase A of our trading range. I don't trade phase A. I don't trade early phase B. I wait for a tightening of the spread and sentiment to change a little bit before I start getting interested. So for me with Bitcoin, not really interested in trading this range. Cash is king, and we can see that cash is king here on the DXY. You know, sitting in cash has actually been an incredibly profitable move. Look at how well cash has been rallying against all other currencies. We've been in an uptrend on cash, so I'm not losing money sitting in cash. I am making money sitting in cash. So that's fine. I am happy to stick with an asset that is increasing in purchasing power. So yeah, not really doing too much. Watch out at the end, or watch out at the top of the channel there. And also pay attention to the NASDAQ. I think we can consolidate here a little bit more. We might have to come down and react around this level before getting a rally up to this level. So for those who are short-term bullish, I think you will have an opportunity in the next few days to get a better entry personally. We're at the upper end of this range. It's not ideal. It's not an ideal place to be taking a position. So patience is key. Patience is key. All right, let's catch up with the chat. Hey, Starry Jenny, welcome in. Mr. JFK, good morning. Jacqueline Dumas, nice and early video. Yeah, trying this new time slot. That way I kind of have the North American audience covered, and then I've got the European audience covered. I can't do Europe at night because I'm sleeping, but I can do Europe in the morning. Thanks, bro. Just heading to work here in the East Coast. Hope you guys have a good day. Have a good day. Heading to work here in the East Coast. Good afternoon, 1234 Odette. Hello. So yeah, taking a look at Bitcoin dominance, we are bouncing off of that area that we have been talking about for the last few weeks. We identified this area as a possible bounce. We are bouncing off of this area. As this climbs, it's going to show an outperformance of Bitcoin against altcoins. Bitcoin is doing quite well. Let's take a look at some of the quotes. So Bitcoin is outperforming ETH on the day. Other alts, you know, nothing really. Matic is outperforming Bitcoin. Phantom is outperforming Bitcoin. 0x is outperforming Bitcoin. 1inch is having a pretty good day. Let's take a look at 1inch. 1inch is a weird chart. You know, it just does these moon missions every once in a while. Still nothing that I really want to, you know, trade. I don't really understand how the 1inch token has value. But hey, you know, people are still trading it. It's a speculative tool. It is breaking above the 50 line of the RSI, so there could be potential of a move here. Let's put a trading range around it and see how it's behaving there. Sitting at the midpoint of the range, probably won't accelerate or get anything sustainable. I would expect a rejection right around $1. So if it rallies up to $1, I'd be looking to take profits around that area. Yeah. And the West African audience as well. All good. Good, good, good. Okay, so let's take a look at ETH. Let's pull up an ETH chart. Like I said, you know, Bitcoin is the one that's outperforming. We can see that. Just based on Bitcoin dominance, that it's not performing as well as other ones. Oh no, I don't want that. There we go. And ETH, yeah, I think ETH has a lot further to go. Now, do we recover back up to about $1,700, $1,800? I think it's possible in ETH, but ultimately I'm looking for $500 ETH. So we still have a further ways to fall. Macro analysis of Bitcoin, I think we have further to fall as well. So we are kind of looking like, do we get a recovery up to 30K, 28K, something like that? It's possible. It's possible. But, you know, if we just rally off from here, it's pretty much a guarantee that we're not going to get back above 30K. We don't have any sort of period of accumulation. You really need accumulation to break trend. And with just a little low here, it's just lower highs and lower lows. But going back to ETH here, yeah, nothing really to report on ETH. Don't really care. It's not going to go very far. I really don't think that there's a lot of volume behind this move. And the macro environment is very, very bearish. There's a lot of fundamentals against the macro environment. CRV broke out, possibly did have a nice rally. Yeah, we can take a look at CRV, but again, I just don't see anything having any sort of sustainable move. So for those who are already in CRV, congratulations. You can probably take profits. But looking to take a position in CRV, fuck no, absolutely not. What a trash coin. The inflation rate of CRV is very, 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 very high. The only people making money on CRV are whales who are depositing their stable coins in Curve pools, and that's it. You know, nobody's really making money on the speculation side of this governance token, especially in the current environment. You know, these governance tokens suck. Governance tokens are shit. We tried them. The way they work right now is not working. So until we switch the way governance tokens are designed, until we kind of play with that a little bit more, the assumption is that they're going to continue to suck and be a big nothing sandwich. Don't like governance tokens. There's one governance token that I like, and that's Looks Rare. And you know, that's not doing anything either. Let's actually take a look at Looks. So yeah, you know, lower high, lower low structure. CRV, it's right up at the resistance. This is the area where you would want to short it. Short it if you want to. I don't think there's much money. There's just no momentum. There's no momentum. Short or long, there's no momentum. It's Chop City. I stay out of Chop. Let's take a look at Looks. Look at Looks. Look at Looks. Looks, you know, I love this design. I love this token model, but it doesn't matter. It doesn't matter if I love it. This is why you can't get too married to these positions, and you have to have a plan that really diversifies your risk. When you really like a project, it doesn't mean go all in, because the market doesn't care how much you like the project. I think that this token model is very sustainable, but the market disagrees with me in terms of price. How come so fast to label the automatic rally on BTC? The downtrend was far too long for that to be an automatic rally. So, you know, TA is an art, not a science. This was the rally that happened automatically. We hit a low and then it went right up. So for me, that's an automatic rally when I'm looking at it on the daily chart. It's an automatic rally when I look at it on the 4-hour chart. You might be able to have the argument that it's not when you're looking at the weekly chart, but I'm not looking at the weekly chart. So the weekly chart, you know, we could have an automatic rally up to 30K, 28K, 29K. You know, I never said that that's off the table, but ultimately, you know, whatever you want to classify it, if your analysis leads you to believe that there's going to be even longer accumulation, I'm on board with that analysis. That's A-okay with me. That is more appropriate. More appropriate indeed. WTI crude oil in accumulation or distributional top. Any thoughts? Let's take a look at crude. I think crude's at a top. No. You're at a WTI. Crude did a pretty healthy rally here. I would be watching out for distribution. Here. So I don't like this right here. This kind of looks like an upthrust to me, upthrust after distribution. So be on the lookout for that. We've also lost support at the ICE. Oops, no. Where did it go? We lost support at the ICE. There it is. And we have a bearish test. So it's not looking good for crude. I think oil begins to have a decline here, a little bit of a correction in crude. If we can reclaim this level, That would be something different, but it's looking like we just broke structure. We just broke down below our ice, and we are on our LPSY, last point of supply. So buckle up. Buckle up. LPSY, get your shorts in play. Get your shorts in play. Some CNBC analysts said Crude is the buy all the dips. So if this isn't a top signal, I don't know what is. There you go, CNBC. It's, you know what it is? I don't think it's done maliciously. I think it's done based on ratings. I noticed this as a YouTuber. My YouTube engagement and video performance does well when I pander to the herd. It does incredibly well when I pander to the herd. So if people want me to say bullish things and I say bullish things, those videos perform well. When I talk truth, in reality, my videos perform poorly. Now, because CNBC, they're not in the business of giving you correct information. They're in the business of selling ad space. So because they're in the business of selling ad space, they just need your attention. You just need to not click off. So anything you want to hear is what CNBC is going to tell you. Anything you want to hear is what any major media corporation is going to tell you, because they don't care about you, they care about profits. And I'm doing my little part. I'm doing my little tiny part to try and be some source of reason out there in a pool of cess. So yeah, it's looking gross for oil. Macro wise, if crude is coming down, doesn't that mean CPI coming down more likely and the Fed tightening less likely, say August and onwards? No, not necessarily. It just means that the demand for oil is decreasing. So, oil, there might be a glut in the supply that can cause this to fall. There might be, I don't think it's connected to inflation. I don't. And just because oil drops in price, it doesn't mean gas prices drop. We've seen that many, many times where, oil drops considerably, like drops by 50%. Gas prices don't drop because the gas companies are making money and they set the prices, and they just keep on competing with themselves on the price of gas. It might drop a little bit, but if they can squeeze more money out of the consumer, they will. It could just mean, it could represent people not going to work. It could represent people getting laid off from work. Dropping oil prices can represent many, many things that can lean into the realities of recession. Dropping oil prices can represent companies going under and having to lay off employees. Not needing to, purchase petroleum products for their machines, not needing to, fuel up and maintain shipping container, cargo, freight ships, whatever the fuck they're called, freightliners. There's many reasons why the demand for oil can go down, and it doesn't necessarily need to be connected to inflation. All right. What else can we look at? Let's take a look at just total market cap. Where do we see total market cap going? I see the total cryptocurrency market cap dropping to probably about 500 billion bucks. $500 billion would be my guess. So another 50% drop from here across the board, whether that's 50% in Bitcoin. I mean, Bitcoin makes up the most of this. It makes up 44% of this index. Yeah, I could see another 50% drop in Bitcoin, maybe even more. This cycle is a cycle that's kind of interesting. First of all, it's fundamentally quite different because cryptocurrency's entire existence has fallen on the shoulders of an equity bull market. We don't have an equity bull market. Secondly, this is a cycle with a lot of expectations. People feel as though they've figured out the models to how to track the value of crypto, and there was a lot of first ofs, you know, like, oh, we have institutions where we can't drop below 40%. We drop below 40%. Oh, the institutions are here. We can't do this. We can't do that. Stable coins are safe. Like nothing trades to do. Like, it doesn't matter what the narrative is. We keep proving to the market that it's all bullshit. So if somebody says, oh no, we can't have that large a retracement, it's impossible. I just don't listen, you know, like, how is it not impossible? How is it not impossible for the entire cryptocurrency market cap to fall 85%? How is it not impossible for the entire cryptocurrency market cap to fall 90%? What if it goes to $300 billion? There's nothing impossible about that at all. Nobody understands crypto. Nobody uses crypto. Nobody cares about crypto. Everybody thinks crypto is a scam. So of course it can fucking drop. Of course it can fucking drop. Oil price can also be political, 100%. I mean, there's different oil pricing depending on which country you're in. Some countries subsidize. A lot of countries subsidize the price of gasoline. Other countries, you know, subsidize oil prices and fix petroleum products. Other markets have different wealth. They have different wealth in them. So, you know, a poor country is going to get a discount on gas, and a rich country like the US is going to have to pay out the nose. I thought there was a weekly green diamond. Isn't minus 50% unheard of after that? It is unheard of. Now, a 50% on alphanumerics. Okay, let's talk about this. A weekly green diamond represents an oversold condition. That's it. It represents the most advantageous point in the market for you to buy in the spot markets. That's it. What it does not do is call a bottom. It's not ever going to call a bottom. It has called many bottoms, but it's not going to call every bottom, if that makes sense. But what it does call is it calls when you're close. So, and this is what is wild for a lot of people to kind of try and conceptualize, is like, you know, back in the previous cycle, the low was $3,000. Okay, and we flashed a green diamond at the bottom of that low at $3,000, and then the trading range went up to $14,000. So we had a trading range between $3,000 and $14,000, which is about a 300% trading range. What is that? Yeah, it's about a 300% trading range. So 300% to the upside potential of the trading range, and 74 to 75%. A 75% downside potential inside of the trading range. This is why people get shaken out of bear markets, because they will watch a recovery, the bull market's back type scenario, where something will rally 300% and they're like, yes, we're back. And what they'll do is when we get to like 200%, they start adding more money. They start adding more money and adding more money because the bull market's back on, and they get convinced of that. Then inside of our trading range, we drop 75% and they lose again. So they lost at the beginning of the bull market, or at the end of the bull market. They lost on the dead cat bounce. They lost on the capitulation. And then they lose again after they redeploy capital after convincing themselves that the bull market is back on. You need to be very careful. Time is your friend. If you don't know how to trade momentum, learn. And there's two ways to learn. You can learn with your dollars in the market by yourself, or you can learn with your dollars in the market with the assistance of somebody else. You don't have to learn from me, but you have to learn from someone. If you want to trade this market, you have to learn from someone. Period. End of story. Otherwise, you're going to be here for 10 years doing nothing but lose money. It's important to get a level head out there. What was the question that sparked all of this off? So the weekly green diamond does not call a bottom. The weekly green diamond tells you when you are very oversold and you are in the range. So the range can be between 10,000 and 30,000 for the next 3 years. Just a hypothetical. It can be a year, it can be 6 months, it can be 30 fucking years. It's just a hypothetical. But you're in the zone. You're in the zone where Bitcoin is perceived, or Bitcoin is very oversold. Many of the market participants who showed up during the bull market have sold. So you're in the value zone. The value zone can come with its own set of volatility, but you are in the value zone. So even if we drop 50% from here, you're still in the value zone. And if we rally 200% from here, you're still in the value zone. The value zone is large. I guess that's the point I'm trying to make. And just because something hasn't happened doesn't mean it can't happen. So yeah, the green diamond has never flashed and we've fallen 50%, but we've also never had crypto in an equity bear market during a recession. So you need to kind of expect a lot of the popular models out there to fail. Doesn't 3 arrows and most of DeFi going to zero mark something very significant? Would be crazy to imagine something worse than that. Well, I mean, there is the potential for worse shit to happen. I don't really care about what the narrative is. We knew we were in a downtrend. We knew we were in a macro downtrend. You know, following alphanumetrics, you know, if you followed the first bearish cross, you were out at 55K. If you followed the second one, you were out at 42. And the price pushes the news. The news does not move price. This is why it is so much more important for you to learn how to read a chart and be emotionless. You need to learn to think like a robot. You need to just not go and search for the answers you're looking for. You need to learn how to read charts because, you know, 3 arrows capital and Luna unwinding, it began here before anybody was talking about it, before anybody was worrying about it, before anybody could even think or fathom that it was ever a possibility. But the fundamentals started there because things got tight. And when things get tight, they get tested. And if you're not liquid and you're not solvent, guess what? The market is calling your bluff and you fucking go bankrupt. So, and when you go bankrupt, you have no choice. You got to go to the media and you got to tell people what happened. Hey, you know, I tried to hide this. I tried to manipulate. I tried to lie, cheat, steal. But the market's not allowing me to get away with it. So now I got to show my hand. And it turns out I'm in a liquid scumbag. This is what happens. So price moves news. Price moves news. So because we're in a downtrend, if we take another leg down, you know what's going to happen? More bad news. Because the price is going to put people in situations where they have to reveal their cards. They have to reveal to the world why they fucked up. They're already fucking up. It's just nobody knows about it. And if the price falls down, they're going to have to show what they did and how they fucked up. So if we fall in price, there will be more negative news. It won't be news coming out that makes the price go down. Apart from BTC, which coins will you be keeping an eye on for the next bull run? I don't know. Solana, Ethereum, but ultimately, I mean, this question is, do you hold BTC? Do you want to hold Bitcoin? Answer me that question. Do you have any interest in holding Bitcoin? Answer me that, and then I will continue to speak. And if you don't want to hold Bitcoin, tell me why. I just found USIRYY US inflation rate. There is a plateau in June, July 2021. There could be a base effect for the year-over-year data, but relatively high this June, July. USIRYY. Mamir, you got some dope charts, man. You got some nice tickers out there. Are you in the Discord? If not, please join and share your fun macro analysis tickers with us. I will index them and I'll create a watch list for the community because you've already given us 2 dope tickers. Get in the Discord, please. Okay, let's turn off alphanumetrics. It's free, links below. You're on YouTube, it's links below. Accumulation range here on the inflation rate. Inflation rate is at 8.6%. So we've just broken out. we just broke out. This is a cool chart. I like this. I like this a lot. Thank you for... I gotta bookmark this chart. I gotta add this. Add this. Add to watch list. Let's put it on. You know what? I'll make a new one called market indexes. Indices. I can never remember how to spell that. Okay. Yeah, so we just broke out. We just broke out. Number go up. Number go up. This is, you know, from what, it's not a tradable asset, but, you know, we just broke out of this trading range. So I would think that in this context, it's, you know, it's not a tradable asset, so it's not really the Wyckoff method, but what it is telling us is, you know, all bets are off. All bets are off here. You know, we had a range where things were healthy. Now things are unhealthy, and we have runaway inflation. So we can see this go up to much higher levels. I mean, we've seen it in the past, 19% all-time high. You know, I don't think that we're going to see 23%, but let's put a line down. Let's put a trend line down and kind of guess as to what we could see in terms of kind of some really bad scenarios. Okay, so very interesting, very interesting. So if we get above 8.6, which I honestly think that we do, buckle the fuck up. Things are going to get uncomfortable. Things are going to get uncomfortable. So if we break out of this level, right now we're at a big resistance. So they're going to come in, they're going to try and do something. And maybe we, you know, that gets inflation back down to about 4.6. People calm down. They hear the number 4 and they calm the fuck down. Markets rally. We get a little bit of a recovery, and then we break out. And if we break out, geez, I mean, seriously, we can go high. We can go, you know, at least 20%. 20% inflation. Ooh, God, that's going to be really bad. 20% inflation will single-handedly make the housing market completely collapse. That will make the housing market collapse. There is so much leverage in the system. In all Western societies, there is so much fucking leverage in the system. If you crank if you crank inflation up to 20, and we have to crank inflation, if we have to crank the interest rates up to anywhere close to, you know, anywhere above 15%, which is insane, but it's not impossible, you're going to see a housing market collapse. Worse than 2008 financial crisis. It'll be worse. Because it'll be in the context of a currency war as well. Breakouts need retests. Yep. Isn't that chart massive? And by the time it hits 20, it's like 2020. Well, I'm not taking into account the length of the drawings that I'm drawing here. It can just moon, right? Like it can just go straight up. It can break out here and just keep going, right? Don't let my shitty drawings insinuate time horizons. Back to 4S can be back to 4S can be a stock market bull run. Oh, back to 4s can be a stock market bull run. Yeah, but I would caution the expectations. If we get a relief in the stock market, I want to use the word relief. If we get a relief, that's your chance to fucking get your shit in order. Get your shit in order, because I don't see a bull run coming. I don't see a bull run coming. I see a relief rally coming. A relief rally will allow you to, you know, rearrange your portfolio, get your shit in order, buy some fucking physical gold, or like, you know, whatever you want to do. But if you go into the mindset of trying to make money off of it, like trying to grow your year-over-year portfolio, you know, you do you. of course, but also looking for some solid, smaller coins for the long run. Yeah, so NIAS 12M, we don't know what they are. We don't know what they are. So, you know, there are a few coins that we can probably guess are going to be around in the next cycle. I think if Solana gets a bullish narrative behind it again, I think Solana can be a performer. I also think that a lot of the layer 0 infrastructure, so Atom, layer 0, and some other stuff can be beneficial. I don't think the next bull run will be good for side chains. So that is one point against Solana, but Solana has a lot of really important infrastructure being built, so it doesn't need to just rely on cheap fees. But what I think happens next cycle is DAOs, STOs, and DAX. Okay, and those don't exist yet. I think the apps start getting a lot more complex, and I think that we stop investing in protocols and we start investing in organizations, companies, and you know, decentralized stocks. So because those don't exist in the market today, I mean, they do, but they're not mainstream, and they're certainly not a bull market narrative. You don't have everybody, you know, there's no mania or mania in sight. It's too early to say, but I think that the coins, we need to just see what happens. My theory is that the projects are going to be quite exciting are going to be decentralized autonomous companies, and they're going to be STO projects. Both terms that haven't really had a really good bull market. DAOs did have a bit of a bull market, but they were Olympus DAO forks that had kind of a bull market. It wasn't just the broad scope of a decentralized autonomous organization. Not all of them have like 10,000 APY and all that bullshit. So I think it's going to be DAOs, and I don't think that they exist right now. And I think that we will have to wait and see. What you want to do is kind of just look at a portion of your portfolio, just a sliver, maybe 10% of your portfolio, and then pick 25 projects or 40 projects and just cast a wide net. And that's your venture capital kind of allocation. Cast a wide net, because, you know, if you hit one out of the park, it'll pay for every fucking loser you get that year, easily. If you hit none, hey, you know, you didn't lose the farm because you only bet 10%. So that's how I would handle venture capital bets. But do I have any on the horizon that I'm looking at? No. Just the shit that's around, and most shit will trade to zero. 99% of the projects you see today will not be here tomorrow. They will trade to absolute fucking zero. Security token. STO is security token, which we don't have a legal framework for yet. We cannot sell securities on the blockchain just yet. Or there's just not enough clarity. I mean, we can do it. We can do anything we want. We fucking hijacked the money printer, so we can clearly do whatever we want. It's just people feel more comfortable with doing things that are legal as opposed to doing things that are not legal. Cypherpunks have had their day in the sun. Cypherpunks have made their money. Now it's time for, you know, regular people to make their money in crypto. All right. Let's see what else we got here. Let's take a look at what gold's doing. This is Tether Gold. Gold doesn't look great. Gold doesn't look great. Let's get a bigger picture on gold. People expect a lot out of gold. And this just looks like a break. This looks like a break of a distribution. Yeah, gold looks like shit, actually. Yeah, I think, you know, it's hard to say what's going to happen. NASDAQ is doing okay. So, you know, NASDAQ's doing okay. The S&P 500, as we called for several weeks, we were calling for this bounce off of this area. It's looking like that bounce is becoming more and more of a reality. So, you know, you want your bull market rally, it would conclude at the top of this channel on the S&P. I don't think we get a higher high. I think we get a lower high, maybe just a double top. And then we nuke. and honestly, not in a good way. Not in a good way. Come back down to the bottom, and if things get really, really hairy, then we actually break out of the channel. All right, that's pretty much it. You know, I wanted to just hop on, talk a little bit of Bitcoin, and talk a little bit of the macro. A lot of people really excited with this small move in Bitcoin. I think because Bitcoin moved rather quickly, it got people excited. But it's just Bitcoin, you know, moving in an illiquid market. It's going to move well in an illiquid market. So for me, nothing to get excited about. So yeah, if you enjoyed this content, please leave it a like. Don't forget to subscribe. If there are any interesting projects that you see on the horizon, leave them in the comment section down below so I can take a look at them and see if they are going to be worth making a video about. Yeah, thank you all for joining in, and we will see you in the next one. Trade safe. It is a jungle out there. Peace.